10 things you need to know before entering crypto space. Would you like to be known as the Sheldon Cooper of the cryptocurrency market? There's no denying that some have become millionaires in this world very quickly. Consider the Winklevoss brothers, who sued Mark Zuckerberg for allegedly stealing their idea for Facebook and spent all of their $11 million settlements on purchasing Bitcoin before becoming incredibly rich. Or Eric Finman, who received $1,000 from his grandmother for college, but invested in Bitcoin when he was just 12 years old, became the world's youngest crypto millionaire. 19 millionaires from all across the world, including tuna owners, are included on the Forbes billionaire list. Why not invest in this economic path and get a treasure box if it has such huge potential? Take a deep breath and watch the entire video as we introduce you to the cryptocurrency from the very basic to its advanced stage. To assist you to sit on the throne, we're going to start by explaining everything there is to know about this wired universe. 1. What is crypto? The word crypt refers to something hidden. Since there is no central authority, supply and demand directly control the value of cryptocurrency. Because they are not traded in the actual world, their transactions take place through a peer-to-peer system in which each payment is logged in a public ledger and stored in a digital wallet. Their transfer is based on algorithm functions without the aid of any third parties like banks in the physical realm. These currencies, which are based on blockchain technology, can be mined as well as bought and traded on platforms. 2. What is blockchain? In a sense, this serves as the currency's lifeblood. You must now be perplexed as to how exactly a blockchain operates so securely. Consider a cube that contains data, a hash, and the previous block's hash. The data in this case may include the transaction's value and the party's names. The hash will resemble a distinctive signature, like your unique fingerprint, that is different from everyone else's on the earth. The signature of the most recent data sent is contained in the previous hash that starts a chain. As a result, the third block points to the second, and the second block points to the first, creating a blockchain. 3. Algorithm. There are now two fundamental categories of algorithms utilized by cryptocurrencies: proof of work and proof of stake. Don't worry, we will make it incredibly simple since we understand that not everyone is tech savvy. Because Bitcoin use a proof of work process for their blockchains, their data is sent to every miner, wasting a lot of electricity and mining power. Cryptocurrencies like Cardano, on the other hand, employ the proof of stake mechanism, which divides time into epochs. Each epoch creates a few slots, or a short time during which each block is formed, and chooses slot leaders to mine their unique assigned task. Ethereum utilized the same procedure up until September 2022, before switching to the proof of stake as well. 4. Cold wallet. After hearing so much about the cold wallet, allow us to explain what it means. They function much like USB drives that can be connected to any laptop and accessed by their password for cryptocurrency trading. These wallets are the ideal choice for frequent traders, as they are one of the safest ways to prevent any theft. However, if you lose them, you've also lost your assets in that situation. They're therefore kept off the internet and stored on a platform according to their working patterns. This will protect them from unwanted access and other threats. The Trezor and KeepKey are two examples of popular cold storage wallets. 5. Hot wallet. These are the software-based wallets that allow users to save their currency while remaining digital. Even though they are less secure than physical ones and are somewhat more vulnerable to hacking, they are nonetheless utilized extensively. We think that when you first start your cryptocurrency trading system, you should use Coinbase, Trust Wallet, or Edge. 6. What is BTC? This cryptocurrency, which has a market cap of $334,312,062,734.07, was first established in 2009 by a person going by the name Satoshi Nakamoto. When a user logs in and exchanges one currency for another on the network, a new block adds to the blockchain. With a zero trust dependency system, the transaction confirms after the payment has been verified by miners, and new blocks are added every 10 minutes. It is comparable to a Google Doc shared among several individuals. Now, whenever new data becomes available, it is updated for every node. Not being the fiat or government-issued currency, this coin is registered on the HolesGuard protected domain. In contrast to 2018, this crypto platform now keeps the registered person's identity a secret. Now, a fun fact. When you see a capital B representing Bitcoin, It refers to the network and the technology, but at the same time, the lowercase b talks about the coin. Returning to its value, one Bitcoin can typically be divided into exactly 8 decimal places using the smaller unit known as a Satoshi. When it was first established in 2009, the block reward was 50 new Bitcoins, which, depending on the price momentum, ended up being worth 6.25 in 2020. These Bitcoins are now stored in a wallet protected by a 24-word private key to keep them hidden from prying eyes. However, what if someone forgets it? Well, that happened to US journalist Mark Frauenfelder, who paid $3,000 for Bitcoin but misplaced the key, causing him to lose treasure valued at $30,000. Before leaving on vacation, he scrawled the password and placed it under her daughter's pillow. After coming back, it was gone into the trash and he lost it all, even though he tried hypnosis to get the combination back. 7. What is Ethereum? After Bitcoin was introduced, Ethereum followed suit with its version of smart contracts that enable the conversion of physical contracts into digital counterparts. This platform is created to support the blockchain by allowing tokens for the work done, using the currency system that Nick Szabo wrote about in 1994. This is quite similar to Bitcoin in that it is based on blockchain technology, but in September 2022, it ultimately switched to the proof-of-stake method of operation. In this instance, each Ether you keep in the digital wallet has a unique private key, which will enable you to proceed with the transaction method. However, except for that, the transaction is very comparable to that of Bitcoin. Ether, the original coin of this decentralized worldwide program, enables traders to conduct their safest transactions. Now, one of the most important things you should know about this platform is that, unlike Bitcoin, the Ethereum platform allows the developers to write the program directly with it to make the servers available. In layman's terms, Ethereum is made up of a trading system in addition to games and other content. 8. Altcoins. There has been a ton of new altcoin launches since the introduction of BTC. Briefly stated, an altcoin is any cryptocurrency that does not include Bitcoin. Now, while some of them are created to mold specific industry trends, others are just a hot mess due to their elevated crime rate. Look at the tuna Luma, which fell 98% in its value and caused so many individuals to lose their wealth in just 48 hours. One explanation holds that the entire loss was caused by under-the-table fraud. But once more, these are very similar to Ether, which is only utilized on the Ethereum network to cover transaction expenses. However, in the end, they are merely designed to close the compatibility gap with the already existing cryptocurrencies. For instance, the first alternative currency, Litecoin, which debuted in 2011, uses the Crypt proof-of-work consensus algorithm. This required significantly less energy than Bitcoin. The variety of altcoins is enormous. However, allow us to outline the most crucial ones for you. Furthermore, there is the payment token, which is used to transfer value between trading partners. The stablecoin, such as Tuna, comes in second and is used to reduce total volatility. They assist by tying the values to numerous products, which may include other crypto coins, legally issued money, or even precious metals. Third, a trader uses security tokens, which function similarly to real estate market deposits. Security and exchange commissions are in charge of regulating them. 9. The value of crypto and why to invest. Let's use the following examples to illustrate. A software developer had no idea what would happen when he exchanged 10,000 bitcoins for 2 pizzas on May 22, 2010. Like other early miners, he was clueless about where to deposit his funny money at the time. However, he might have had millions of dollars in his bank account if he hadn't done that. This day is now annually observed as Bitcoin Pizza Day. Nowadays, this currency is used as a substitute in almost every industry. Consider CryptoKitties, one of the first NFTs to offer a collectible for paid digital artworks. Not only that, but people are already using Ethereum to breed new cats. Each kitten comes with a unique set of values. Potcoin is a currency with a marijuana motif at the same time. The healthcare industry is said to benefit from Bongner's assistance in offering support. Furthermore, KFC began taking cryptocurrencies in 2019 and entered the Bitcoin market. Their 10-cent deal of fries, chicken, gravy, a medium side, and 2 dips just went viral in the market because of their limited edition Bitcoin bucket. All of this cost around $20. For this reason, Time.com reported that experts think everyone should put at least 5 to 30% of their financial portfolio in cryptocurrencies. People were astonished to see that 21% of people are happy to put their money in cryptocurrencies even after the recession, when Bankrate's September study made CNBX public. But even after all of this, we think you still need to exercise caution when making such an investment. We're not asking you to devote all of your efforts to the crypto world. Data showing that 46,000 people lost $1 billion in 15 months, even in the middle of the year, shows how customers are employing inferior strategies. 10. What is FTX? Being the second largest cryptocurrency, you must at all costs be familiar with FTX. Sam Bankman-Fried recently revealed that it was striving to improve its liquidity pool. People were thrilled since it not only meant additional exposure to investments, but also a rising chart. However, their agreement with Binance fell through and we were left disappointed. It wasn't long until FTX's Twitter account commented on how they're attempting to collaborate with others as well. It was just a fresh craze in the cryptocurrency industry. Then, a few days ago, FTX announced its agreement with Tron, enabling the swapping of assets like HT, TRX, JST, and even Sun. This not only shows us that this cryptocurrency is maintaining its market domination, but now that it is compatible with external wallets, you will have a fantastic opportunity to begin trading straight from the start. Last but not least, reports claim that the weekly payments and subsequent injections will be based on factors such as Tron's present agreement about funding capability and withdrawal demand. 11. Pointers to keep in mind. There are several ways you can trade properly and protect yourself now that we have educated you so much about this cryptocurrency. For instance, using platforms like Discord is far better in these situations than using Facebook and email. Additionally, we think you should use Gmail for your email accounts and enable the two-step authorization procedure. Proton Mail, developed by researchers at MIT and CERN, can also be an excellent option. Forbes claims that this is the only email system that the NSA's red-eyed hackers cannot defeat. The next option is to use Windscribe as your VPN provider to keep you safe online.